My name is Aaron Bork, and I'm a senior counsel and head of fund formation for RPCK, Rastegar Panchal LLP. The project that I submitted for the Grunin Prize is Maycomb Capital's Outcomes Finance Accelerator Fund, Impact Carry Structure. Maycomb Capital's Outcomes Finance Accelerator Fund is a fund designed to provide risk-tolerant, outcomes-aligned financing to mission-driven organizations in Colorado and surrounding states across a broad range of social and environmental sectors, including education, environment, health, workforce, and economic development. The fund will build on Maycomb Capital's market-leading work, providing pay-for-success financing that matches private capital with local priorities by realigning government spending with evidence-based solutions. The core problems that the fund seeks to solve can be split into two categories. Number one, the problem that Maycomb Capital seeks to solve with the fund's investments, and number two, the alignment of incentives at the fund level to encourage the fund manager, in this case Maycomb Capital, to responsibly steward the fund's impact purpose. First, I'll address the problem that Maycomb Capital seeks to solve with the fund's investments. Despite significant public spending, large swaths of individuals and families find themselves in a cycle of poverty and lack access to quality education, jobs, or other opportunities to thrive. Policy decisions are often disconnected from the evidence of what works, and too often, government dollars are not aligned with the intended outcomes. More than 50 million families in the U.S. benefit from human services programs, and the government spends more than $800 billion per year on these programs. Yet, bipartisan leaders posit that less than 1% of the funding is linked to evidence of actual impact. When government-funded human service programs don't generate meaningful outcomes, it is individuals, families, and communities that lose. The Outcomes Finance Accelerator Fund will address this problem by offering outcomes-based financing to for- and nonprofit organizations in Colorado and surrounding states working to address a broad range of social and environmental challenges by providing vital services in the areas of workforce development, early childhood education, homelessness, healthcare, social services, and financial services. Outcomes financing represents a next-generation public-private partnership that combines market discipline with performance management, realigning government spending with evidence-based solutions to social challenges. With outcomes financing, government and community leaders and other partners come together to leverage private dollars to fund the upfront delivery of high-quality services. By building public-private partnerships that align government spending with outcomes in communities, the Outcomes Finance Accelerator Fund will build on the work of Maycomb Capital's flagship Community Outcomes Fund to bring accountability and transparency to human services and expand access to economic opportunity for those who have historically been left behind. The Community Outcomes Fund's Denver Para-to-Teacher Pipeline project provides a good example of the types of projects that the Outcomes Finance Accelerator Fund will invest in. Denver area school districts, like many others across the country, are facing a severe teacher shortage combined with a lack of racially diverse teaching staff. To address these challenges, impact investors, service providers, and workforce experts and school districts launched the Denver Para-to-Teacher Pipeline project. This public-private partnership uses outcomes financing to scale a proven strategy for building a talent pool of diverse, experienced educators committed to their local community. The Community Outcomes Fund is financing the expansion of a pioneering teacher training program that will enable 200 paraprofessionals, such as unlicensed teaching aides and classroom assistants, to become full-time teachers over a 5-year period. Project partners are all aligned around driving strong outcomes for graduates and their students, measured by rates of teacher placement, diversity, and retention. As important and transformational as the fund's underlying investment strategy is, the deep impact commitment and flexibility of both Maycomb Capital and the fund's anchor investor, Zoma Foundation, also allowed the legal team to use this fund as a sort of laboratory to develop an impact-linked carried interest structure designed to align Maycomb Capital's financial incentives with the maximization of impact at the investment level. The concept of impact-linked carried interest has become increasingly popular in the impact investing industry over recent years as a potential remedy for the perverse incentives that the traditional 2-in-20 fund compensation structure can create for fund managers. Tying a portion of a fund manager's compensation to the maximization of financial returns for investors, as the traditional carried interest structure does, may encourage impact fund managers to sacrifice social and environmental impact in order to chase higher financial returns. Impact-linked carried interest, in theory, solves this problem by tying fund manager compensation to the achievement of measurable impact. However, the details of impact-linked carried interest structures can be challenging to figure out. They require a rethinking of several complex, interrelated, but widely understood and accepted mechanics in a traditional fund carried interest structure. As a result, the high level of enthusiasm for the concept of impact-linked carried interest has not translated into a significant number of real-world examples, putting the concept into action. This project presented the right conditions for a thoughtful approach to impact-linked carried interest. Both the fund manager and the anchor investor were deeply committed to implementing an impact-linked carried interest structure, and were also willing to put in the time and incur the additional expense necessary to do so. At a high level, the impact carry structure works as follows. Each portfolio investment will be assigned 3 to 5 outcome targets. As a portfolio investment generates proceeds, those proceeds will run through a 2-tier waterfall: an American-style deal-by-deal waterfall for impact carry, and a European-style whole fund waterfall for financial carry. While the parties agreed that a European-style whole fund distribution waterfall is the market standard for traditional financial carry, they both acknowledged that a whole fund distribution waterfall would not be workable for impact carry because each portfolio investment will generate unique impact that cannot easily be aggregated with the impact of other investments. As such, we concluded that it would be necessary to apply a deal-by-deal waterfall to the impact carry. Investments will generate impact carry on an investment-by-investment basis, depending on how many of the outcome targets were achieved for that investment. However, we incorporated a concept of platform impact carry, whereby the GP has the opportunity to earn impact carry that was unearned with respect to specific portfolio investments if the fund achieves an overall impact target agreed to by the GP and a majority in interest of the LPs, which may include expanding the use of pay-for-success and outcomes financing in the geographic area in which the fund invests. While every impact fund will inevitably have its own nuances, we believe that the impact-linked carried interest structure that we developed for the fund can be replicated and scaled across impact strategies. The fund formation lawyers for both Maycomb Capital and Zoma Foundation played a critical role in developing the unique impact-linked carried interest structure for this fund. RPCK's senior counsel and head of fund formation, Aaron Bork, represented Maycomb Capital as fund counsel, while at his former firm, Reed Smith LLP, along with Reed Smith tax partner Angelo Sciavarella. RPCK partners Joshua Teitelbaum and Chintan Panchal represented Zoma Foundation in connection with its anchor investment in the fund. The legal team worked collaboratively to develop the impact-linked carried interest structure, working together with Maycomb Capital and Zoma Foundation. The Reed Smith team became involved early in the project at the point of designing the fund's legal structure and developing its terms. The RPCK team became involved when they reviewed the draft fund documents prepared by Reed Smith. This project required legal expertise in the areas of fund formation, tax, and regulatory compliance.